Hi guys, today I'm here to share with you my Bank Nifty Intraday Strategy. It's based on 4 rules, fairly simple and easy to follow. I'll explain those rules to you before we actually look at the charts to see how the strategy is deployed. Please do leave comments in the comment section below with your doubts so I can sort them to the best of my capacity. So let's jump in. This is a purely intraday strategy. We are going to work on volume profile to find out levels which we are not going to trade. I call those levels no trade zones. So I'll teach you how to mark those levels, and before that let's see what the requirements of the strategy are. So first we need volume profile. Second, we will use exponential moving average, a 50 period moving average. I basically use the 50 period moving average to give me a reference whether to take long or short trades. We will use the RSI with a period of 3 and 80-20 bands, and the fourth one we need is a volume chart. That's it. So just 4 requirements. Now let's take a look at the rules of the strategy. We need 2 back-to-back green candles. The second candle close should be above the previous candle high. So the second candle should close above the previous candle high, and the second candle low should be above the previous candle low. So that is the condition. The most important price action condition that needs to be fulfilled is a combination of these 2 candles. Now there could be a wick on the top side on this candle also. A small wick is fine as long as it's not a very big wick. A very big wick will indicate sellers in that candle, so we will skip that trade if we do see big wicks in that candle. But otherwise this is the kind of candlestick formation that we will be looking for, and the second candle's RSI should be above 80. Right? It's fine if the first candle's RSI is below it, but the second candle's RSI should be above 80. Now let's take a look at the bearish candle setup. 2 bearish candles back to back. Again, a small wick here on the bottom is fine, but a very big wick will indicate buyers, so we will skip that trade. But this is the perfect kind of setup that we want to follow. We don't want to follow 2 big candles, so very big candles we want to skip. The second candle close should be below the previous candle low, which is this, and the second candle's high should be below the previous candle's high, and the RSI of the second candle should be below 20. Right? So these were the conditions on which we would trade. Now let's take a look at some charts also. This area that you see is volume profile. You can find it in indicators. This is the visible range volume profile that I use. I don't use session volume. I use the volume chart, which you all know about. This is the volume chart right here. We will be plotting the RSI, the 80-20 band RSI with a period of 3, and we will be plotting the EMA, which is the 50 EMA right here. So how do we use this? This is the 25th of June, and we will be plotting the volume profile for the 25th on the 24th. So we'll be using a day which is previous to the trading day, and since this is a visible range volume profile, what we want to do is we want to plot only the previous day on our screen. So now we have restricted the screen to the previous day, right? So we don't know what the present day is. So if we wanted to plot for the present day, what we would do is we would mark these regions which are high volume nodes, like this. Yeah, so we've marked one high volume node here. The second node I see is here at the level of around 34,759. So let's mark this level also. Right, so we marked this level, and then we see a big pin bar here. So you have to watch for price action also. Here we see the price did try to go up with big green candles, and then from here we see a big wick on this particular candle, which is the 2 o'clock candle, above which the price did not go. So we will mark out this area, which is the day high also, and we will mark the day low, and from here we're going to ensure that these are the areas in which we are not going to trade. So let's see how price reacted to these areas on the next day. So now that the price opened a gap up on 25th, we do not have any levels marked for this particular day. So what are we supposed to do in this case? We're supposed to go back to a day and we can see that there is some price action in that area, and we will have to mark that area out. Now see, I don't have anything marked on the chart right now because I wanted to chart everything with you guys. But under normal circumstances, I would normally be plotting these support resistance lines much prior. I would have marked a few levels upwards, maybe 200 to 300 points upwards and 200 to 300 points below the present market price. This was the day on which the price was trading in that zone. So that was the 7th of June. Let's plot volume profile again. We will mark the top of this candle. Yes, these should be our levels now. We do not want to trade in these zones. These are completely no trade zones. I do mark the bar on the top and the bottom in volume profile. So what you can do is you can actually only mark wherever these levels are close by. You can only mark the outer borders of it. So you can delete the inner borders to avoid confusion. So you can see now that this entire zone you don't want to trade, right? You don't want to trade this entire zone. It doesn't matter if price rallies, but you can see these red candles happening exactly at the place where we have drawn the resistance. So there is a very high probability that the price might reverse from here. So we definitely don't want to trade in those areas. A big green candle, then a bigger candle than that. The volumes were also pretty good on those candles, but then price took resistance and then broke the resistance on this with this candle. This candle did have RSI above 80, and this candle also had good volumes, higher than the previous candle. But then we were inside the no trade zone, right? So you don't want to trade in these zones. Wait patiently, don't do anything here, don't enter. Then the next setup we got was here, right? We had good RSI volume on these candles, and we had the exact setup that we have been looking for, right? And we also have a good area till the next resistance where we can take profit. And as you can see, we've already plotted this resistance here. After you see this kind of a setup, you should not take a trade right away, but after the breakout happens at this area, this was the 130 candle. So now we should shift down to the 3-minute time frame, and let's see where the 130 candle was. This is the 130 candle. Yes, so after this candle broke out, on the high of this candle we will place our buy entry, and we will place the SL below the entry candle. Till the next resistance you can take a trade which is more than 1:2. I usually suggest you should book your profit side 1:2. This is how beautifully price will respect these levels. So these are the levels of price itself, and this is the place where buyers and sellers have stepped into the market prior, and there has been a lot of smart money that has exchanged hands here. This is the way you trade. Today is a trending day, so it was easy to show you that, but believe me guys, volume profile is extremely powerful. And if you've noticed, I have been looking at the index futures chart here for the simple reason that we cannot plot volume profile and volume on the spot chart. One thing I forgot to mention prior when I was talking about taking entries here is that once you find this kind of a setup, always compare volumes. I'm not saying that the volume should increase in that fashion. I'm not saying that the second candle should have big volumes like these, but at least the candle should not have a much lesser volume, like say like this somewhere, where this is the volume on the previous candle and this is the volume on the next candle. So that should not happen. The other rule is that you don't want to be taking short trades above the 50 EMA. You want to make sure that you take only long trades above the 50 EMA, and below the 50 EMA you don't want to be going long. You want to be taking only short trades. You have to be patient in the market. So you have to follow all 4 rules. That is the most important part of this strategy. you have to ensure that the RSI of the second candle has to be above 80. The previous candle RSI is fine if it is low. Try to ensure that you do not take a trade where a candle has just barely broken out of the resistance level, right? So ensure that the candle is a good strong bullish candle. Do not take trades on candles which has wicks on the upside. So for instance, this candle, see, this is a weak bullish candle. This doesn't show a strength, but all these candles, this one is okay, this one is good, this one is good, this one is good. But since it was a trending day to the upside, these candles are all strong candles. This will not be the case in every market scenario, right? So just ensure that you follow all the rules. Be patient in the market. Success comes to those who are patient, and do try and test this strategy out in the live market, only doing paper trading. Only after that you should step into the live market with actual capital. Whenever you see this kind of a setup, just ensure that you step down to the 3-minute chart and then take trade based on the 3-minute chart. Similar setup will be available when you are trying to search for a short setup, so the rules will be applicable to the short setup as well. So guys, this was the strategy. It's a very powerful intraday strategy. Do leave comments in the comments box below with any queries that you might have, and I'll only be too happy to answer them. If you need any guidance with the volume profile, with marking charts on the volume profile, please do let me know that too. I am going to be posting EOD charts with post-market analysis and levels for the next day. So please do subscribe to the channel. Don't forget to like. Thank you so much.